Welcome back to the post-morning session. Just a couple of announcements. Somebody's lost an Android Oppo phone. Suggest you contact the registration desk. And a hearing aid has been handed in. Let me rephrase that. A hearing aid has been handed in. It's at the registration desk, all right? Okay, moving right along. This session is sponsored by AGR and Mackay Drilling. Torque Metals is a dynamic gold explorer whose flagship project, the Paris project, is located in one of the world's great gold jurisdictions. It lies within the Boulder-Lefroy Fault Zone in Western Australia, which is host to producers of over 70 million ounces of gold. Torque listed on June 25, 2021, and has been drilling almost continuously since then. It's already made 4 new gold discoveries. Executive Chairman Ian Finch joins us from the site with this presentation.
Hi, I'm Ian Finch, CEO of the very exciting Torque Metals Company. Now, I'd really love to be with you today, personally, and as exciting as the conference is, thanks to Stewie and his team, up here on our mine site is even more exciting. And my object now in the next 10 to 15 minutes to explain to you why it's so exciting and why you should ease this company into your portfolio if you possibly can. It's a growth company and it's going places. Now, how do we come across this company? Well, it was 4 years in the making. It didn't happen by chance. We were looking for a jurisdiction where we knew we were going to get success. In other words, an elephant park. Here we're in the elephant park. So if you look at the 3 major countries in the world that produce gold, you've got China, you've got Russia, and third on the list is Australia. So with obviously the sovereign risks that we see in China and Russia, Australia's got to be the place. So where in Australia? Well, that without a doubt leads us straight into Western Australia. Well, Western Australia is a big place. So what are we looking for? We're looking for high-grade jurisdictions. And there's no higher grade jurisdictions than in the Boulder-Lefroy Fault Zone, which is where I'm standing right now. So having got the country, got the state, got the structure, here we are drilling somewhere in the region of 12,000 meter in, I think, about 143 holes that we've drilled since we listed on the 25th of June in 2021. And we've been drilling almost continuously during that time. So the Boulder-Lefroy Fault, let's go back to this and why I'm standing here on this spot. Behind me, there's a beautiful SRAM rig, wonderful piece of engineering. But if you go 8 kilometers to the north of that, further on, then you'll find a place called Maynard's Dam. Now, we've got a joint venture with Jindalee at Maynard's Dam, and there's a few recce holes there, not many, but one of them is going at about 3 meters of 28 grams. That's high grade. That's what we were looking for. So if you go 2 to 3 kilometers beyond that, you come to St Ives. And everybody will know that St Ives has produced many, many millions of ounces of gold and is continuing to produce gold until the future. And that is not too far to the north of us there. So come back down in almost a straight line from Maynard's Dam, and you'll get to where I'm standing today. This is our first discovery. It's a project or a prospect within the Paris project, which is known as Observation. Now, behind the camera and over there are 3 old pits, I guess you'd call them. We could find no record of any gold within those pits, but they must have been here for a reason. And to cut a long story short, on my right is our discovery hole, which is hole number 9 that we drilled here at observation. And that gave us a whopping 9 meters of 11.2 grams. The rig that you see behind me is actually now testing that 9 at 11.2 at depths in the region of 100 to 150 meters. This is a brand new discovery. The strike length, which is open both ends, is approximately 300 meters and going. And of course, now we're testing the depth and we don't know how deep that will go. One thing we do know is that the grade seems to be improving with depth, although we've only drilled down to about 60 or 70 meters at the moment. So this is a very shallow prospect. If I now go 800 meters to the south of where I'm standing, I come to a shallow pit called the Triple H pit. And below that Triple H pit are several tens of thousands of ounces that could have been mined, and the scoping study was done for it. But we decided to explore laterally from that mine as well as underneath it. And lo and behold, we come up with actually our 4th discovery. And this discovery is called the Caruso discovery. It's a very shallow discovery because we were only using scout holes at the time to the northeast of Triple H. And lo and behold, the better grades in there were almost from surface going up to something like 15 meters of 3 grams. But when you look at the gold price today at $25.50 or thereabouts, you're talking at about $83 to $85 per gram. So that's a lot of dollars right at the surface. So Caruso is going to be very critical for us. We will be working a second rig there at some point in time and looking at the extent and see whether or not we can join it back up to that ore, which we know is sitting underneath the Triple H pit. And if I go from there south another 1.1 kilometers, I come to the Paris mine itself. Now, the one thing that attracted us to Paris, not only its high grade, but it was a very, very shallow open pit. And we knew that high grade existed at depth. We also had 33,000 ounces in jaw category that had been left behind, not only underneath Paris, but in conjunction with what was left underneath at Triple H, just 800 meters to the south of me here. That was an amazing 33,000 ounces because it was in the indicated category. We could have gone straight into and mined that straight away, but the issue was, how much more was there? And my history tells me that we're in the right spot to create millions of ounces, at least hundreds of thousands of ounces here, without actually going to mine at a small mine level. So that's what we're doing. We're explorers. We're expanding the resource. The first drill phase, which found this discovery hole at observation, the purpose of it was to discover where we could expand the reserve and the resource rather at the fastest possible rate, which really translates into what are the higher grade prospects. And you can see because of the rig behind me that this is one of the higher grade prospects. There are numerous hits of 9 meters of anywhere between 6 and 11, 12 grams. So who knows what we'll see when we get down at 100 meters, 150 meters that we're attempting at the moment. Spectacularly, some of the drilling at Paris has thrown up totally bonanza grades. If you go back in a few months' time, in a few months, you'll find a release which says that there was a zone that we hit underneath the Paris mine, or actually off to the northeast of the Paris mine, which ran a phenomenal 24 meters of 10.7 grams. And in that, there were 6 meters of 34 grams, over an ounce dirt. It doesn't take much of that to rack up the ounces in your inventory. And that is where this rig was only yesterday, as a matter of fact. So that hole has been drilled, and we await the results of that check hole on that bonanza grade that we hit. we think we've got a massive underground trend there of high grade that we haven't even really started scratching the surface of. Now, where do we go next? Well, one thing that's happening here is all of these discoveries, and there have been 3 brand new discoveries altogether to date, all line up within geological and geophysical lines. And we call it the corridor. It's the Paris corridor. And there are maps, which you'll see, which show where that corridor tends to and tends from. And what we've done to the south of Paris, we've filled out a huge geochemical survey to find out where the next targets are to the south of Paris. And that's another 5-6 kilometers of strike of this susceptible geometry and geology. So as we go on from here, we'll be creating a pipeline of prospects. For instance, this one will be testing broader down dip extensions. It will be testing east and west extensions. Similarly, at Paris, we'll be testing deeper and lengthier extensions to the northeast. One should remember the name, Torque, is going a long way. The ticker code is TOR. We are relatively new but dynamic. And if you look at our corporate slide, you'll find that there are only 68 million, plus or minus 68 million shares on issue. In other words, there's plenty of scope for investment leading to the upside that we're planning. And we will continue drilling. This is a drilling exercise to increase the resources here. And I wish you all the best of luck with your investments. Why am I excited by the Paris project? Well, you've only got to listen to my voice to know that I've been in this business for 52 years now, and I have not had this kind of return on emotion, if you want to put it like that, since I started. And I've been all around the world. This is an exceptional project. It's getting exceptional results, and we're looking forward to more exceptional results. That's what's exciting.
Yeah, you can tell he's a bit fairly interested in that project. Just a couple of things to mention. More lost property. We have a pair of glasses that have been handed in at the radio desk. We're still waiting to find that hearing aid. Oh, the phone has been found. The phone has been found. The hearing aid is still missing. So we go on from there. So thank you, Ian. Always a very passionate presenter and very passionate about the resources industry. Stephen Michael is the new Managing Director and CEO of Vimy Resources. Vimy is developing Australia's next uranium mine, the Mulga Rock project in WA, and also exploring at the Alligator River project in the Northern Territory. This will be Stephen's first outing at an RIU event. Welcome along, Stephen.
Thank you very much. Good morning, everybody, and thank you for taking the time to listen to Vimy Resources. As mentioned, I am the newly appointed Managing Director of Vimy, and this will be my first face-to-face presentation. So here goes. So Vimy, we are looking to develop the first greenfields uranium project in Western Australia and at Mulga Rock. So at a glance, we have 100% interest in the Mulga Rock project, which is located about 300 kilometres northeast of Kalgoorlie. Importantly, we are the only project to have reached substantial commencement. I'll talk about that a bit more later, but it's quite a significant milestone and ensures that we have all of the ministerial approvals and consents required to develop this uranium project. Life of mine, we're looking to produce £3.5 million per annum for 15 years. Cash cost in the mid-$20 range. That's based on a 2020 DFS. The reserves and resources up on the screen, you can see, importantly, the reserve grade at over 800 ppm is quite high grade, and that is what makes this project economic at current uranium prices. Our second project located in the Northern Territory, Alligator River, more consistent with unconformity related uranium deposits such as in the Athabasca Basin in Canada. Here we have an initial resource at one of our prospects called Angulali, which is 26 million pounds, very high grade, 1.3% uranium. For those that are not used to reporting in percentages, that's nearly 13,000 ppm U3O8. So around 20 times the resource grade of Mulga Rock. Smaller deposits, but very high grade and extremely economic. And at Mulga Rock, in addition to the uranium, we do have base metal occurrences within our uranium resource. And we've now pegged over 2,000 square kilometres of exploration licenses, which we're starting the initial exploration to hopefully discover the source of the base metals, which we believe is in a sedimentary basin sitting over the Mulga Rock uranium deposit. So why Vimy? We're in a tier 1 mining jurisdiction, being Australia, and we're finding that's actually resonating very well with the potential utilities that we would be looking to sell the uranium to. So the North American and European utilities see Australia as a really good source of future uranium for them, especially with what's going on in the world with Kazakhstan and Ukraine and Russia. Having sources of supply in Australia is seen as extremely positive. The project itself, low capex, low opex. The ore body sits in a paleo channel about 40 metres below surface, so very shallow, free digging down to the ore body. The reserve grade, as I mentioned, is relatively high, and we're looking at about an 87% recovery. So the combination of those factors also lead us to having a low operating cost project. The DFS that we completed in 2018 and then refreshed in 2020 did not include the benefit of recovering the base metals, and that's something which we're now working on, and that could also help enhance the economics of the project. We are the only project to have achieved substantial commencement, and that means that all of the approvals that we have in place remain in full force and effect going forward. The permitting well advanced and on track to meet our development timetable, which will see us producing first uranium in 2025. And ESG is the key driver of change. We've seen the COP26 summit last year. There was a lot of pronouncements by governments about reinstating their nuclear energy policies or expanding or enhancing their nuclear energy fleet. And as people move away from coal, we see nuclear as being the logical alternative. There's always going to be a push towards renewables, hydrogen and other sources of power. However, if the sun's not shining and the wind's not blowing, then uranium is the base load power source of choice. Quick snapshot of the company. We've got a market cap today of around 200 million, and at the end of December, 16 million in the bank. The register's roughly 50-50 institutions and retail. Main institutions on the register, we have Paradise Fund out of Sydney. FFI is Forest Family Investment, so Wyloo Metal sits there with just under 5%, and Lexband is a private investor out of Brisbane. There's been a lot of change at Vimy in the last 6 months at both the board and management level. So this is the slide that I've probably changed the most in the last 6 months. The people and positions in red have all been changes, new people to the company or changes of position in the last 6 months. Hopefully that's settled down now. The last two changes we announced was that Tony Chamberlain, who was the previous COO of the company up until 2019, he stayed on the board as a non-executive director for the last few years. He's now agreed to come back and join the company as of this month as the Chief Operating Officer again. And I've been interim CEO for the last 5 months, and I've now been made MD going forward. And hopefully that will be the last of the changes. But essentially what we now have in place, we're building a team that can take this project from the study phase through to bankable feasibility study into project financing and then development and production. And we're building that team around us to enable us to do that. So where are we? We're 290 kilometres northeast of Kalgoorlie in the Great Victoria Desert. The great thing about the location is we don't have any neighbours of note. We've got no towns, communities nearby. The only thing that we share the ground with is a small marsupial called the Sandhill Dunnart, and we're in the process of putting together an area of 6,000 hectares for the Sandhill Dunnarts to roam free, and they won't disturb us anymore. We're just located off the Tropicana Hall Road, and that provides us a lot of advantages. As a small developing camp, we do have services that we can share with Tropicana, and it reduces the cost of our transport to site. So as I said, we cleared the substantial commencement hurdle at the end of last year. In late 2016 and early 2017, the last Liberal government approved 4 uranium projects in Western Australia for development. All of those projects had the same condition, which was a 5-year window to reach substantial commencement. Our drop dead date was the 16th of December last year, and on the 16th of December at about 3:45 in the afternoon, I received a letter from DWER saying that we had met the conditions under the ministerial statement of substantial commencement. Unfortunately for the other 3, they haven't received that same letter, and they will do what they need to do to try to keep their projects alive. But at least for us, we've gotten over that hurdle, and we don't see any impediments from a political perspective on developing this project. We're now firmly in the secondary approval phase, so dealing with the likes of DMERS and DWER and EPA services, rather than dealing with any sort of government political side of the agenda. But to achieve substantial commencement, it wasn't just putting up a fence and a sign saying "Welcome to Mulga Rock," although I think there is a sign saying "Welcome to Mulga Rock," but that wasn't what we needed to do. We've cleared both the Ambassador pit and the Princess pit, which are our first 2 pits, which will run for about 8 years. So we've cleared all the topsoil, subsoil and vegetation from those pits. Late December, we received approval for our radiation management plan, which then enabled us to start breaking ground in earnest. And you can see in the top right, that was the first development of the in-pit ramp. That ramp's now down at about 5 metres below surface at Ambassador North. We've also cleared the area for our camp. The camp will have a permanent workforce of about 350 people, but during construction, that'll be around 550. So we've got the camp area ready for that. And we've got a group on site called Polyline Pipe Systems, and they've got a unique or novel technology where for our pipeline to our water bore, we're about 32 kilometres from the water bore. Rather than bringing pipe to site, they bring the extruder to site. And what you can see there is them pumping out HDPE pipe on site in 200 to 300 metre continuous lengths. So these are some pictures just from the last couple of weeks. You can see the pits now developing quite well. We're down to, I said, about 5 metres in the pit ramp. You can see the overburden landforms are starting to take shape, and PPS are there extruding pipe. I think they're producing about 500 to 600 metres a day of pipe. So we'll have that pipe completed within about a month or so. So things are developing quite rapidly on site. And as I said, we will be the first uranium mine in WA. And at the moment, it looks like we'll be the only uranium mine. So these are some highlights from the Dfs Refresh completed in 2020. Now, these numbers will be updated this year in our BFS. But the things that will remain the same are the 15-year life of mine at £3.5 million. And probably more importantly, that all of the uranium coming out of Mulga Rock will be exported, and somewhere in the world there will be nuclear power plants generating carbon-free energy, and the energy produced from the Mulga Rock ore will offset roughly 70% of Western Australia's greenhouse gas emissions during that period of time. So unfortunately, we won't see the benefit of that in Australia, but globally, someone will benefit from it. So the last 3 years have been about project studies, Dfs Refresh, and then achieving substantial commencement. This year, the focus is turned to taking the project through to bankable feasibility study and then financing. So the aim for us is to complete the BFS by the third quarter of this year and then go into project financing. The good thing about having done 2 rounds of DFSs on the project is most of the technical work will carry straight through to the BFS, and there's only a few areas which we need to focus on this year. So clearly, cost inflation has been significant in Western Australia in the last year or so. So we have to go back and complete the mining study and get our mining costs up to date. We're starting a dewatering trial, which will commence in the next couple of months, to enable us to determine how quickly we can get the groundwater down below the paleo channel. We're continuing to work away at the optimization of the uranium extraction, and we're looking at different resin beads, and that can improve our recoveries. However, at 87%, we're probably getting close to our maximum on recoveries. An item which hasn't been included in the DFS or the DFS refresh was the recovery of the base metals. With the base metals that we have at Mulga Rock are copper, cobalt, nickel and zinc, and those prices have increased significantly over the last few years. So we're now working on ways to recover those base metals, and we believe that those base metals could actually add about $4 to $5 a pound as a credit to our operating costs, so bring our costs down by $4 to $5 a pound. So we're going to do a lot of work this year on recovery of base metals, and we're also starting a study into hybrid power, noting that Tropicana down the road from us is developing a wind farm, which surprised me given we're in the desert, but where we are, it's more windy than it is sunny. So they've gone for wind. We might go for a combination of wind and solar. And so we're going to be doing studies on the benefit of those this year. That'll then lead us into a 2-year development timetable for 2023 and 24, leading to first production in 2025. From a uranium extraction point of view, we've done a lot of test work through the study phases, including building a pilot plant in Perth. And we have now taken ore from, we've had 2 geotechnical investigation trenches dug at site. We've extracted ore and processed it right the way through to yellowcake at the pilot plant in Perth. But more importantly, we've then taken that yellowcake material and transported it from Western Australia to South Australia and exported it out through Port Adelaide. So we've demonstrated that the permits and approvals required to transport the radioactive material, we have gone through that process and received those approvals previously. So we're very confident that at a full mine scale stage, we'll be able to transport the material out through Port Adelaide without any difficulties. Our other project in the Northern Territory, I just want to spend a few minutes on this one. Alligator River, we've got a large land holding in the Northern Territory. Over the last few years, we've consolidated the ownership. We now own 100%, having initially acquired a major stake in the project off Cameco, and then last year we bought Rio Tinto out of a minority stake. This is elephant country when it comes to high-grade uranium deposits in Australia. And as I said at the start, Angularli is our maiden resource. We have an inferred resource there, 26 million pounds at 1.3%. The highest grade intercept we had there was nearly 23 metres at 4.6%, so 46,000 ppm uranium. This is really high-grade country, and we haven't been able to get on the ground and do drilling for the last couple of years because of COVID. The project sits in Arnhem Land, so it is a very sensitive area when it comes to COVID and potential infection for the Indigenous communities. We believe we can get back on the ground middle of this year, and we're planning a 5,000 metre drill program. It'll be roughly 15 holes, 200 to 300 metre holes. And we're focusing on depth extensions at Angularli, strike extensions, but then also parallel structures. And the aim at Angularli over the next year is to get that resource up to over 50 million pounds and then go beyond that. We've got an exploration target there of 120 million pounds based on the known prospects we have there. And we're looking to develop those over the next couple of years. So just looking at why uranium, this chart was produced by the United Nations Economic Commission last year. You can see nuclear is at the very bottom left. If I zoom in on that area, greenhouse gas emissions, or in terms of grams of CO2 equivalent per kilowatt hour of electricity production, nuclear is down at less than 5 grams. The things that it will be replacing, being coal and possibly gas, sit at the far right at anywhere from 200 to over 1,000 grams of CO2 equivalent per kilowatt hour. So nuclear is far and away the best alternative to those other very high carbon emitting baseload power generating sources. And we've seen, especially over the last 6 months, a lot of government statements coming out of pro-uranium around the world and pro-nuclear, including just recently France building up their nuclear fleet again, Japan reinstating their nuclear fleet, and a lot of parts of Europe also reactivating their nuclear fleet. So the next 12 months for us is going to be very busy. We've got a lot of things that need to come together over 12 months to enable us to reach final investment decision by first quarter of next year. But bringing those all together, we believe that we'll be able to remain on track to be in production by 2025. Thank you very much.
Matador Mining controls the Cape Ray Shear in Newfoundland, Canada, with the JORC mineral resource of 848 840,000 ounces of gold. Newfoundland has become the hottest gold exploration area in Canada, with 75 Canadian companies currently exploring the island. Matador is the only Australian company to have tenement there, and they were there before the current exploration boom began on the island. Ian Murray is chairman of Matador, and he joins us now. Welcome, Ian.
Thank you, Jerry, and thanks to the RIU guys for getting me out of, or getting isolation reduced from 14 days to 7, so I can actually be here physically and present to you guys. I've spent the last 7 months overseas, thanks to our Premier, spending time at the project with the team, meeting stakeholders, meeting government officials, etc. Stuff you can't do from here. So the company's got a market cap of around $65 million. What we hold is 120 strike kilometers of the Cape Ratio. This is a multi-million ounce shear to the north of us, 50 kilometers to the north. Marathon Gold's got 4.8 million ounces of gold, and we've got 840,000 ounces of gold. The gap between it has never been explored. We've already done a scoping study. The average grade of our resource is 2 grams. However, from that scoping study, the first 4 years, we mine at 2.6 gram per ton, which makes it a very economic, one of the highest grade open pit projects, undeveloped open pit projects in the world. We're on track with all the permitting and the environmental approvals in country. They'll be submitted by August of this year. Just a quick word on Newfoundland and where we are. Those of you who knew me from Gold Road, we developed the RIU project 1,200 kilometers away from Perth. This project is 25 kilometers away from a major port on the island and a town. So it's a lot easier when it comes to developing the project. Plus power that goes into Newfoundland is from renewable hydropower. So you're tapping straight into that power source, great from an ESG perspective. Our tenements, as I mentioned, 120 strike kilometers. Over 90% of it is under a shallow transported till, 0.5 meter to 5 meters. And this has never been explored prior to Matador going in there. So that's the upside for our shareholders. We do have cash in the bank, $11 million, well funded from the raising we did last year, which introduced Franklin Templeton onto the register and CI Sentry onto the register. Some of those faces, you know, they're from Australia, myself, Justin Osborne, Mick Wilkes. But given that the project is in Canada, we've added people into the management team that are known in that area and operate in that area. I'll point out Crispin Pike over there. He's our country head. He runs the team over there. We appointed him just on 12 months ago, and he's built up the local geology team that's doing very good work on the ground. Below him is Kerry Sparks. Those who don't know Kerry, Kerry was the principal geologist at Franco-Nevada. He is Pierre Lassonde's right-hand man when it comes to geology. He's still contracted to Franco-Nevada to visit all of their global projects and make sure that the geology, the resources and reserves, and the mine planning are done properly. He keeps getting approached to join boards. He's retired, but he's only joined us as a consultant because he worked on the project. He's from Newfoundland, and he's passionate about doing the right exploration work on the island. On the right-hand side, we've got Sam Pazuki. Sam is joining us as CEO in May. He's currently with Oceana Gold. The reason we've appointed a Canadian-based CEO is the project is there. For me to fly from here to Newfoundland will take me 2 days just to get there once I get approval to leave the country. We need somebody who can hop over with one flight from Toronto to the island and meet the government officials that we need to meet to progress this project. Okay, on to Newfoundland, and I'm sure most of you aren't aware about the island and the exploration history. And that's because up until the 1980s, all the exploration tenement and rights to mineral rights were held by one family. It was only from the 1980s that use it or lose it laws came in, and that's when exploration started on the island. If you look at the areas in yellow, they were the tenements that were pegged in 2016. In light green are the tenements that are currently pegged on the island. There are 75 Canadian companies exploring on that island at the moment. There's only one ASX company, and that's Matador. Of those 75, only 4 have got mineral resources, and we are one of them with the 840,000 ounces. So the company that's got a lot of attention is Newfound Gold, with a market cap of $1.5 billion with 0 resources. The reason is they've got that value is they've been hitting 3 ounces per ton, and they're calling it a Fosterville lookalike. The real company on the island is Marathon Gold. They're a long strike from us on the Cape Ray Shear. 4.8 million ounces of gold, going through the final stages of their project studies and project approvals, and they should be starting their construction in the second half of this year with a 10-year plus mine life. We further down on that Cape Ray Shear with that massive area in red that we currently hold. So we zoom in onto our tenements to give you a flavor of what we've got. So as I mentioned, 120 strike kilometers all the way up, with the current resources in a small area. 15-kilometer strike length covers our current resources. And the area outside of this area has only ever had 20 diamond drill holes in over 100 strike kilometers. So this is the last tier 1 jurisdiction that hasn't been explored in the world. Australia's got lots of exploration. It's been explored for over 100 years. US, Canada, exploration for over 100 years. Newfoundland, exploration in the last 20 years, but only proper exploration in the last 3 years. That's when you've had this exploration boom happening and all the Canadian companies trying to get tenement in that area. If you look at our tenements, the resources on the right, all 4 of those resources is where the mineralization outcrops at surface. The old explorers did not know how to explore under cover. The cover here is between 0.5 meter and 5 meters. Companies exploring in Western Australia explore under tens of meters, hundreds of meters of cover. Australian geologists know how to explore under cover, and that's the opportunity here. We're taking Western Australian exploration strategies and applying it in this area which has not had the proper exploration in the past. So what we did last year is we flew mag surveys over a 40 strike kilometer area, and we've got very detailed mag images now. These are flown 30 meters apart, 25 meters above the ground. The highest resolution aeromag ever flown on the island. That was only phase 1. We'll do phase 2 this year. That's given us a whole host of targets that we're now testing. So the next stage, the next step in our testing, and again, this has never been done on the island before. We use Auger Rigs or Winky drill rigs. We built 5 of them now, and they drill through the transported material and they take the sample through the material together with the top of fresh. We get a 20 centimeter long diamond sample from the top of fresh. We send that away for multi-element assays, and that shows us the pathfinder elements in that area. We can detect when we're up to 100 meters away from a gold discovery. Previously, people only explored where it outcropped, and for them, success was if they hit gold in the ground. If we hit pathfinder elements, we know we're close. We can then hone in with a diamond drill rig. And as I mentioned again, over 90% of the area has this transported cover. So zooming into where we've had the most excitement in the last 12 months is Window Glass Hill. And this image is out of date already. Last year, we worked out the Window Glass Hill resource, which is 500,000 ounces. And to the northeast of that is the central zone, which is 500,000 ounces. The Window Glass Hill resource is just that the bright pink area there. It's surrounded by a yellow boundary, but you can't really see the yellow. But that's the resource area there. We now know that that's hosted, well, we thought it was hosted on a 3-kilometer long Window Glass Hill granite. You see the other bright purple area. That was the discoveries we made last year on the margin of the granite. Where the granite meets the sediments, we hit very good grades and very good widths. So here on the right-hand side, historical drilling from previous announcements. We had 45 meters of 1.2, 19 meters at 4 grams per ton on that margin. Good grades, good widths. We then announced in December, got the 32 meters at 2.6, 30 at a half, all on this boundary with that granite. But if you look at the original image, we haven't tested that margin at all. This is the first time that margin's been tested. And if you look at the footprint of what we've got, that footprint is as large as a footprint of the existing resource that we've got there from 2020. We've now found that this granite extends in parallel to the central zone resource for another 3 kilometers. So this granite host is a 6 kilometer, well, at least a 6 kilometer long structure that has not been tested. So the geologists have a serious debate about what could this be. And we've now drawn parallels between what we have at Window Glass Hill, and this is all done to the same scale. So we've got the 6 kilometer long Window Glass Hill structure, which has not been tested outside of the 20% where we've currently tested, to Valentine Lake, which is owned by Marathon Gold, the 4.8 million ounce system, also hosted on a granite structure with the gold on the margins, and Red 5's Tormula, King of the Hill project, which is historically had 6.1 million ounces of gold. Our system is not as long as Valentine Lake, but longer than what's at Tormula. So our geologists debate, what could it be? How big could the system be? Well, we don't know until we drill it. We have one dedicated diamond rig drilling out Window Glass Hill granite this next year. It's our highest priority target where we can get resource growth through the drill bit. But that's only one of many targets that we've got. We're going to look at the drilling that we did in 2021, last year. We did 20,000 meters of diamond drilling. The year before that, we did 12,000 meters of diamond drilling. So obviously, we're increasing the rate of drilling. We've built up the team in country. We've got the expertise locally, and the guys are becoming more and more efficient in their drilling program. In addition to the diamond drilling, we also did a massive, so the image at the back is from the aeromag we did. Malachite Lake at the north is this massive area. It's 12 kilometers long by 4 kilometers across, never been drilled before. And those geos in the audience will see the nice bend, the cross-cutting structures, secondary and tertiary structures there that's never been tested. So we did a 1,200 till sample from that area, where we're doing the gold grain analysis at the moment. In addition to that, we've also, I mentioned the Auger Rigs, the 5 rigs we've got. We've got 3,500 samples taken with the Auger Rig. Again, providing more targets for us to come in with the diamond drill rig. We've still got 35 diamond drill holes awaiting assay that we should have back in the next month to 6 weeks. And we completed that HeliMag, which has been a game changer for us on the ground. At the moment, we're busy with our winter drill program. We have never done a winter drill program there before. It's another first for Matador. Previously, we would have drilled at most 7 months of the year and wasted 5 months. This season, we had a 4-week break. We've gone back in with the winter drill rig, 1 rig. We're going to be drilling between 3,000 and 5,000 meters of drilling. That'll take us through to end of March into April. We'll have a 4-week break, and then we'll be back with the summer program with the at least 2 diamond rigs for the rest of the season. So we are going large here. This is very prospective area. As I mentioned before, where in the world you get a tier 1 jurisdiction that hasn't been explored properly before. It's only been explored in the last few years. So with the winter program, we're currently drilling at PW East. This line is the ice road, the snow road that we create, to get up to the next target of Stag Hill, Isle of Mort, and then up to Benton. So you take what's left from the summer program, 35 diamond holes, which you can see on the map, together with the winter drilling we're doing at the moment. There's going to be continued news flow coming from Matador. And then by the time we're still getting the winter drill results, we'll be back into our summer program. I'll just point out, Big Pond is a new area. It's got a small resource there, 19,000 ounces, but running at 5 grams per ton. From the aeromag, there are good structures there. We've done the auger drilling, and we've followed up with some diamond drilling. I mentioned Window Glass Hill. There's 28 diamond holes still awaiting results from that area. Stag Hill is a 7-kilometer gap on the same structure that's only ever had 1 historic diamond drill. So we're testing that area. Benton, we've got up to 180 gram per ton gold in rock chips, never been drilled properly. So in conclusion, that is the Matador story. It's not in Western Australia. However, it's in the most exciting Canadian province, Newfoundland, where exploration has only really been switched on in the last 3 years. We have a strategic land holding in the southwest. We've already got 840,000 ounces. We've got a scoping study which shows that it is very economic and very profitable. The exploration strategy is to grow the mine life to give us at least 10-year mine life and at least 100,000 ounces of annual production. Thank you very much.
Thank you, Ian. Joining us now is Jeremy Robinson, who's the Managing Director of RareX. And he's here. We don't have an intro for Jeremy, hence the very scant introduction. You're up.
Okay, thanks for that, Jerry. Very short introduction, as he said, and thanks for the team for putting this on. I believe this is my third time presenting here on behalf of RareX. RareX, we're a rare earths company. We are quickly developing Cummins Range and growing it into quite a sizable resource at the moment on the back of some very good drilling last year, and we plan to continue to drill out the size of this resource this year and show people what it can truly be. I'll skip through that. Corporately, REE is the ticker. Of course, we've got a market cap of about $50 million, $5 million in cash and investments, so we've got enough to get away drilling this year. It's worth talking about the board for a moment. Being in these EV commodities, it's good to have people that have been there before, and John Young is our chairman, has been there at the start of Pilbara, so he brings a lot of good guidance to myself. Cam Henry is there. He's the founder of Primero, so has a lot of extensive experience in processing these more tricky materials. The shareholders, largely retail shareholding base. We have Simon Lee there with 6.5%, and the board and management and friends of board and management are probably about 10% there as well. So I mentioned at the start, we're a rare earth company. We're very much focused on our Cummins Range rare earth project in the Kimberley. It's a really exciting project for us. It's one of two mineralised carbonatites in Australia, the other one being Mount Weld, which is the only operating rare earth mine in Australia. So we think we've got some pretty good pedigree to follow up there. We put out a resource in the middle of last year at about 19 million tonnes at just over 1% rare earths. Importantly, within that, there's a high-grade core to it at about 2% rare earth, and it's very much the 2% material I'm focused on finding. Last year, it was the first time this program has been drilled with diamond drilling, and we had quite a bit of success with the diamond drill bit. We proved that the high-grade structures persist at depth. It's not just a deflationary event, as previous operators had thought. And that's given us confidence to announce our expiration target on the primary, which we've done today. So we're targeting a drill out this year towards a 23 to 41 million tonnes at 1.6 to 2.4% TREO. So I believe we can get this project to close to 50 million tonnes at around the 2% mark, which should set it up to be one of the top 3 projects in Australia going forward. You might not have noticed, but rare earth prices are currently going ballistic. They went very, very hard prior to Chinese New Year. Normally they come off after Chinese New Year, but they've continued on the march up. So I'll show you some slides on that shortly. So rare earths, what are they? Apologies if you're across this, but rare earths are prized for their magnetic properties. They're essential in the electrification of things, which is going on at the moment. The primary growth areas are electric vehicles. In the motors in all the EVs and Teslas that you read about, NdPr magnets bonded with iron and boron. So they're very strong users of that. Also, offshore wind turbines are a massive use of rare earth permanent magnets, and specifically neodymium and praseodymium, which are the metals we're focused on. So there's a graph on the left of expected demand over this decade. Look, you're talking very strong growth rates. You can see what's going on around the place with, lithium prices run spectacularly recently, and now we're seeing the rare earth price run spectacularly as well. In 2011, we had a similar event, but I need to point out that was a geopolitical event. So you can see what happens when the squeeze comes in rare earths. What you're seeing now, we believe, is real demand. There is simply not the supply to meet the demand that's coming over this decade and beyond. When I started at RareX, we were talking $40,000 a tonne for NdPr. I think as of last night, we're $175,000 a tonne, which is the highest it's been since 2011. So we haven't seen the equities react. We hope to see the equities react as these prices are are more sustained for the longer term. Look, I will touch on our Asg Framework. It's something we take seriously. We operate in the Kimberley. We do work with our traditional owners, the Jaru people there. We contribute a significant amount of money to them every year through our exploration agreement with them. So the resource, when we walked into Cummins Range some 3-4 years ago, it was about 11 million tonnes. Mid last year, we upgraded it to almost 20 million tonnes at those grades. Importantly, the high grade is there, is the 6.5 million tonnes at 2% TREO. The pay in our rare earths is NdPr, neodymium, praseodymium. We run about 20%. That sits well within the range of the historic 15 to 25% is what most of these rare earth deposits run at in terms of their NdPr content. We do have niobium. We have plenty of scandium as well, which we don't talk about, but we also have an appreciable amount of heavy rare earths, dysprosium and terbium, about the 0.5% to 1%, which doesn't sound like a lot, but when you're talking about terbium, that's $2,000 a kilo, it certainly adds up pretty quick. So what have we been doing over the last 6 months and why are we excited to get on with the next 12 months? Look, it's all about what happened with the drill bit over the last 6 months, 6 to 12 months for us. Historically, people had viewed this project as the high grade being driven by a deflationary event, that being the weathering of time, upgrading the monazite in the laterite. That is what happens at Mount Weld, but it's not what happens at Cummins Range. We have something different going on, and we saw that very much with the high grade structure. There is a high grade structure present through the core of the resource, and I'll show you some vertical long projection in a cross section as well. Also recently, there is a high grade phosphate zone emerging to the north. We were drilling out there for rare earths, but I'll explain to you what's happened with the phosphate as well. It's not unusual to find phosphate in these systems. They are primary sources of phosphate around the world, and I'll talk about that in a couple of slides. So this is the drilling. This is a slide that illustrates what's been going on. All the resource to date is held in this top 100 metres in the regolith in the oxide portion. We took a view by looking at some of the RC chips that this was representative of a high-grade structure persisting at depth. So simplistically, we drilled a bunch of diamond drill holes last year, about 20 all in all. This is a cross-section. First hole, we proved ourselves right, 20 odd metres at plus 3% TREO. And last of all, a hole we put out on Monday, we're consistently getting high grade, 14 metres at 3% TREO down to 240 metres. So I suspect the more holes you put into this, the more of these stack loads you'll find, and that's what we hope to continue drilling out this year. I'll show you this. This is a vertical long projection over on the left. This was running northwest, southeast through the deposit. It's in the grey, you can see our historic resource. In the yellow boxes, you can see where we've extended the known mineralisation through our drilling last year. And you can see today we've announced our exploration target of 23 to 41 million tonnes at 1.6 to 2.4% TREO. That's in addition to our current resource. We believe, and you wonder why I can expand it down to 400 metres, we're talking about a carbonatite here. These things plumb the centre of the earth. Bamborough, for example, is mined to 2,000 metres below surface. So you can see the geologies of these things are very vertically extensive. There is, in fact, an old CRA hole that sits down here at about 400 metres, which gets high-grade rare earths as well. So the whole thing is wide open in every direction. It's our exploration target that we've announced today. We think that will set us up for, to become a very large rare earth deposit in a safe jurisdiction. We've got 2 rigs showing up as soon as it stops raining at the end of next month to basically drill out this panel here, and that should deliver us our exploration target and beyond. It's worth looking at this photo on the right in terms of that's what the primary looks like. Rare earths can be challenging metallurgically, but what you're looking at here is the black being the rare earths monazite and the white being the host rock carbonatite. So it looks extremely visual to me. We haven't done the work yet, but I'll be shocked if this doesn't all sort well and upgrade to make a really high concentrate and point to some really favourable economics for the whole project. And also, as an aside, we've picked up some really good phosphate numbers in this northern zone. We were aware of phosphate out here to a certain extent. We're also aware of moderate grade rare earths, or 0.5% to 1% rare earths. We drilled a diamond hole. It isn't labelled, unfortunately, but 15 underneath it. That's the only diamond hole we've drilled out there, and we hit significant primary phosphate, 71 metres at 15%. It's a phosphorite unit. These are things that are mined around the world, most importantly at Phosphor Bamborough mine in South Africa, which is mined at about 7 or 8% phosphate. The Araxa carbonatite intrusive in Brazil, which is mined at about 12%. So igneous phosphates, which is what this is, they range 5 to 15%. We got 15% in our first hole. We are still focused very much on the rare earths, but we will interrogate this thing because it looks like it's got scale potential now that we've tagged it in the primary. And we are working on a budget to properly assess this. These things do occur concurrently, rare earths and phosphates. It's not unusual. They're rare earth phosphate, niobium carbonatites. And we're very excited by this development, and we will progress it as we move forward this year. Study work is ongoing. Most of our study work to date has been on the oxide, the top 100 metres. We're currently expanding that to look at the primary as well. The primary should be a lot easier than the oxide in terms of metallurgical performance. We will finalise our study sometime during this year. We're just slowly integrating the primary portion. When, you know, three quarters of your resource is primary, you might as well focus your studies on the primary as well. So that's where we're going with the study work. And I should say we've got lots of really, really good consultants and operators there to assist us. So in summary, look, we're a rare earths company. We really believe in the rare earth space. Prices are finally upon us. Our project is a really good one. It keeps surprising us. It started out as a small project. It's becoming a very, very large project. It'll quickly go past some of the others on the ASX in terms of size, and hopefully it continues to grow over this year and in the coming years. Our exploration target itself is not insignificant. We'll drill towards that this year with at least 2 diamond rigs and an RC rig to assist at certain points during the year. So with a relatively modest market cap of 50 million, I'd encourage you to take a look at this project and our company as a whole. We very much believe in the rare earths thematic. It's its time, and yeah, hopefully it's RareX's time as well. So thank you very much.
Oliver Kiddie is Executive Director of Legend Mining, a systematic explorer on the hunt for the next major nickel sulfide discovery in the Fraser Range. Oliver joins us now with the Legend Mining story. Welcome, Oliver.
Thanks, Jerry. Thanks to the RIU team, Stu, Jackson, Prue and the rest of them. I got grabbed on the way in by the MD of Mincor and said, warm up the audience for my presentation, please. I can't really say much about Mincor except I saw Chairman Chen here, so I can guarantee the numbers in their presentation are correct. To the Legend story, we're a purely nickel-focused explorer. And the takeaway from today is Legend and backing Legend, the systematic nature of what we do results in share price appreciation. So at the end of this, hopefully you see this and reach into your pockets and dive into Legend. I'll take our disclosure as read. Our capital structure, we've got circa 2.7 billion shares on issue, a market cap of 200 million at about 7.2 cents currently. We have plenty of cash, nearly 19 million of cash and receivables. We've got 149 million options at today's share price in the money, due to vest between July and September this year. And importantly, we have no debt. I think the key takeaway from the capital structure here for Legend is 55% of our shares are held by the top 4. And those top 4 include Mark Creasy, who's paid 23 million all cash, IGO just shy of 11 million all cash. Mark Wilson, our MD, he exercised his options, paid 1.6 million in cash, and pre-Christmas just bought another greater than a year's salary after tax on market purchasing shares. Dave Bailey, the 4th largest shareholder, is a high net worth in Perth. All his shares bought on market. And everybody listed on that slide up there as part of the board or the key management have actually bought shares on market. So it's all about skin in the game, which is incredibly important. At Legend, we pride ourselves on our stakeholder relationships, and this can be found within our ESG policies on our website. So to invest in Legend is to invest in the name. So the location, we've got 3,000 square k's or just over of the one of the most underexplored nickel belts in the world. Experience, we've got the right corporate and technical team, ably supported by joint venture partners and major shareholders. The growth, we made the Mawson discovery of massive nickel copper sulfide in December 2019, and we have a pipeline of highly prospective regional targets. Enabled, we have the right people both internally and externally to the company. We have a really strong cash position, and we're going the distance, as we always say. Nickel is the future-facing commodity. We're nickel focused. Obviously, it's a key component to the battery, the EV evolution. And delivery, it's all about share price appreciation through systematic exploration, which you constantly hear us talking about at Legend, which will result in ultimately share price appreciation. There's been plenty said by more technically competent people than me on nickel and markets in general, but you would have had to have been living under a rock to not know that nickel is one of the pin-up commodities as part of this EV evolution. Very quickly, it's a supply-demand equation. You can see there, inventory levels have dropped off a cliff, and the nickel price has responded and increased and continues to increase, with all forecasts suggesting that it's going north of where it is today. What does that mean for Legend? Well, we're looking to replicate a discovery of Nova or larger. Nova and IGO, on the back of their quarterly results, they're producing nickel at $1.86 AUD a pound, and they're selling that into a north of $9 US a pound. So the margin there is absolutely enormous. So where are we? We're a single project company at Legend. We're in the Fraser Range, circa 300 k's east of Kalgoorlie. We're about 120 kilometres north of Nova, 100 k's south of Tropicana. We're primarily targeting these orthomagmatic nickel copper cobalt systems, i.e. like Nova. And one of the key takeaways from our actual project location, you think 300 kilometres east of Kalgoorlie, quite remote. Well, we've actually got the Trans-Australia Railroad running right through the southern portion of our tenure. And that's really, really handy infrastructure for product in, product out. So why explore the Albany Fraser? Well, Brad Underwood from Galileo made a really good slide on this yesterday. And look, I'll just expand on that a little bit. July this year is the 10-year anniversary of the discovery of Nova by Mark Bennett and his team. And you've effectively seen the evolution of the belt within 10 years, and it will continue to evolve. The type analogy, obviously, on the right-hand side is the Thompson Belt, and that's been touched on. You've got 2.7 million tonnes of nickel metal endowment there. We've just got just over 300,000 tonnes of nickel metal endowment in the Fraser Range to date. The Thompson Belt's been explored for 50 years, and they've got over a dozen mines. The Fraser Range is just ticking over 10 years this year. We've got one mine, we've got another deposit there being Silverknight, and we're well and truly on our way to having more mines and more resources delineated with the amount of now fertile intrusions that we're actually uncovering. So who are the main players in the Fraser Range? Well, it's really down to three now. We've got IGO, who is obviously the dominant landholder and have the Nova nickel mine. We've got Galileo and we've got Legend. And as you can see from that diagram there, Legend controls effectively 50% of the belt, and at a market cap of circa 200 million versus IGO 9 billion, we're clearly the leverage play. We have a look now at our lead prospect, which is Mawson. So the Mawson discovery, like I said, was made in December of 2019. Mawson itself is a central intrusion sitting within the 16 by 6K ellipse, which we call the Mawson Intrusive Complex. It's a series of prospective mafic, ultramafic intrusions, and part of this year's exploration program will be starting to interrogate some of these intrusions outside of the main Mawson intrusion itself. Through 2020 and into 21 was very much about understanding what was the mineralising system, what was driving Mawson. Well, what we know to date is that we've got a very large mineralised system which remains open in multiple directions. When we kicked off exploration last year, we had a circa 400 metre strike length of known mineralised chonolith there in the west. By year's end, we'd actually extended that to over 1.6 kilometres and growing in the strike length. We know we've just completed the 3D structural model. We know that this is very much a structurally controlled intrusion. That's critically important to understanding what's controlling the mineralisation. We know we've got significant endowment of mineralisation, like one of the better intercepts there. Over 30 metres at nearly 3% nickel and 2% copper is not to be sneezed at. Supporting that is the multiple intercepts of disseminated nickel copper sulfide within this larger halo, suggesting that we've got this large mineralised system driving Mawson. The chonolith, the mineralised chonolith, we know extends at depth below 500 metres, and we'll plan to interrogate that through obviously the seismic, which I'll talk to shortly. But one of the other things to note is the massive upside here based on the level of the thickness of cover, the conductivity of the cover that we have to deal with here, as well as these enormous stratigraphic EM plates. So you can literally hide anything within the shadow of these EM plates. The end of last year, we completed the acquisition phase of the first Greenfields 3D seismic cube by a junior in the Fraser range. We completed a 6.5 square K area over the Greater Mawson intrusion with the aim of actually trying to define the chonolith below 500 metres where we have drilled, and obviously outside the drilling envelope. We also completed an ultra detailed part within this western part over the discovery zone with a view to actually get a detection signature for the massive sulfide. As part of the processing, which I've been fortunate enough to be obviously bolted into, we're at the stage now where we're starting to see some preliminary data, not depth constrained, but we're starting to see some preliminary data, and myself and the technical team are pointing at the screen and very excited about what we're seeing, as are the technical bolt-ins that we've got to this. Part of the byproduct from the seismic is obviously the velocity, and this is complementing really, really well with our known data sets already, being the gravity and the structural model and the geology. We're seeing the same arcuate feature here in the gravity as we are in the seismic. This is replicating in the mag as well. So this is really, really positive, telling us that there's something dense, something big at depth, which is driving the Mawson intrusion, driving the Mawson mineralisation. So for 2022, obviously we're gathering up our drill targets as we speak. A lot of that's reliant on the seismic processing, which is underway at the moment. So in the coming weeks, we'll release the results from our seismic cube. On the back of that, we'll validate targets. There'll obviously be new targets generated. We've got circa 6,000 metres of diamond drilling planned already, with a drill rig booked for March to start, as well as an air core rig, and obviously ongoing targeting based on drilling and drill results. We've got a healthy drill budget for the Rockford project in total for 2022 at plus 6 million. And one thing about Legend is 90 cents in the dollar goes in the ground, and there's not too many companies that can actually say that. We're not just about Mawson, which is our lead prospect. Obviously, we've got 120 strike kilometres, over 3,000 square Ks of prime real estate here in the Fraser Range. And we've got a pipeline of quality targets outside of Mawson itself. These targets, we're continuing to undergo analysis and upgrading, downgrading according to new data that comes to hand. One of the key things that's come out from our work over the Christmas period is this intrusion fingerprinting, which we've labelled the nickel sulfide vector index. I'll talk to that shortly. That's a really, we think is an amazing breakthrough in fingerprinting these intrusions in the Fraser Range. We continue to identify new targets. We've got EM booked for some of our highly ranked targets, and air core drilling to kick off at the start of March. These compelling targets will be followed up and tested with diamond and RC. One of the breakthroughs we had over the Christmas period, and I'll give a plug here to Nigel Brandy's in the audience, we got him to complete a pilot study for us using mineral mapping technology on air core and RC chips. And we've been able to identify some real key mineralogy indicators within these intrusions, which give us the ability to pick fertile intrusions from non-fertile intrusions. And that's really, really important for when you've got such a ground holding as we do here at Legend, to have very much a binary indicator to make sure we're putting the dollars in the right area. One of those areas that's come out of this pilot study, highly ranked, is octagonal. Octagonal is one of two intrusions which sits on this main structure, which is the Nova Silverite structure, the second intrusion being Magnus. Those samples are currently going through this index ranking at the moment. These are two known fertile intrusions akin to Nova, and they're bigger, thicker intrusions, and they're ideal targets for the application of seismic. Once we get the results from Mawson, we're happy with the results from Mawson. These are two candidates where you could roll out seismic and upgrade these targets very, very quickly. As always, and I think it's very important, I think Stu touched on it, there was plus 100 IPOs, resource IPOs this year, all drawing on already a very, very skinny pool of talent with respect to consultants, drilling companies, professionals, etc. We're very, very fortunate at Legend because we've got a loyal bunch of professionals bolted into what we do at Legend, and they're very much a part of the journey and very much backing and in belief of what the journey, the path that we're on here at Legend, and believe not just one discovery, but multiple around the corner. The work programs, obviously, we've got a busy front end of the year. The seismic modelling and processing will come to an end by the end of February and look to get something to market. We're currently going through statutory approvals for regional and Mawson, target generation ongoing, EM's booked, drill rigs booked, we'll be out there in March drilling. So in summary, I hope in that 14 and a half minutes that I've given you reason to dive into your pockets and buy a few shares in Legend and join us on the journey. We've got the right project, the right commodity at the right time. We're systematic, persistent and committed at what we do here at Legend. We're very well funded to execute. We have the right people with skin in the game, as I said, and we have the passion to grow shareholder value. Thank you, and come and see us at booth number 56 if you want any more detail on seismic or anything else I've talked to today. Thank you.
Thank you, Ollie. Plenty of vacant seats around the place rather than be standing up at the back like parishioners at the last Mass on Sunday, waiting for the pubs to open. Ian Bamborough is Managing Director of Saturn Metals and joins us to talk about his vision for a large-scale, low-cost Apollo Hill gold project here in WA. Welcome along, Ian.
Thank you for the introduction, Jerry. I'll make sure I lean in close to the mic so everybody can hear me. A little bit tall for it. Saturn Metals listed in March 2018, so we're just about 4-year-old. I'm going to show you what we've done in that last 4 years, but more importantly, what we're about to do next and perhaps some of the catalysts for growth. First of all, where are we? Situated about a couple of hours drive north of Kalgoorlie, on the heart of the Walloon and Horseman Greenstone Belt, 1,000 square kilometres of genuinely underexplored and completely underdone ground in a central strategic position. Key points on that slide, some beautiful infrastructure, some really nice gold infrastructure as well around us. I guess there's pipelines, roads, rail, very close by. And we sit on a structure called the Keith Kilkenny Shear, which is a big, fertile, deep gold tapping structure, 100% owned contiguous ground package. Key points on that slide, I suppose, uniquely, or not that uniquely, but I suppose an advantage to the company that we've managed to build up a very strong institutional shareholding base, which I'd describe as long and technical. I suppose are following some of the work we've done and believe in this project and where it's going. and directors and management, and a well-known gentleman here in Western Australia who supports us as well. Gives us the top 20, about 67% of the company. Share price growth, I guess since inception, a nice steady accretive growth pattern, which I think is something to do with the ore body I'm just about to describe to you, which is healthy, but gives a steady growth rather than any spectacular growth. Funds 10 million in the bank. We've managed to keep our capital base very tight, and in terms of EV per resource ounce, probably one of the best value gold stocks you're going to see around. I'll show you what we're going to do with it next. Apollo Hill Works, it's the project at the heart of our ground package there. It's just shy of 1 million ounces. It's a big tonnage, low grade deposit, but the deposit works for a couple of reasons. One is its geometry and its size. The width of the ore body there that you see depicted at the top is about 500 to 600 meters wide of constant mineralization. And all our exploration so far has been about shallow, easy additional ounces, and ounces in one big, single, simple open pit. The geometry is, because of its geometry, very low strip ratio, and we'll come on to some of that later. Since inception, we've added about just under 500,000 ounces in that 4 years. That was till January last year, and we're just about to do a resource upgrade now with the results of that, another 50,000 ounces. Another 50,000 meters of drilling, and hopefully a hell of a lot more than 40 to 50,000 ounces. All done at a very good discovery cost per ounce, so very efficient drilling. Within it, I think something gets lost in that last diagram is perhaps the scale of that deposit. That system is as long as the super pit and as wide as the super pit. And you'll see last year, that's the picture, it was open to the south, and the next couple of slides I'm going to show you how we've infilled that gap and even pushed the position to the north. But the other key point on that slide is within it, there's a really nice higher grade architecture. And what we're trying to do there is pull out, if you want that skeleton that exists, there's some intersections there, 8 meters at 12 grams, 14 at 7. You know, I always make the point, I'm a couple of meters tall, so these aren't small, skinny rafts of mineralization sat within a very big, continuous ore body. From that position in January last year, we've done a number of tactics to grow the ore body, improve the ore body, and lift the quality of that ore body. And I'm going to show you some of those now. So the first one was look for leverage points or pinch points underneath the pit shells where we could see opportunities for, if we found better intersections, to either pull those pit walls out or push that pit floor down, or both. And we were quite successful in that. And there's a couple of really nice intersections which were in those pivot points, as I call them, either under that pit wall or under the pit floor. The second one was I wanted to show the sort of hidden qualities or the hidden opportunity within inside this pit. So we took 10% of the deposit and we decided we'd grade control drill it, something you don't usually do until you get to a mining stage. And we were absolutely delighted with the results. Other than some of the sort of record-breaking intersections on the deposit that we've turned up in the last year, 54 meters at 3.72 from shallow depths. And I'll make the point, this is a virgin, clean, brand new deposit at surface, has never been mined, with no sort of historic mining to contend with. I think you can see there in the before picture at the top and the after picture at the bottom, what happened as we did that infill drilling. First of all, the gold didn't disappear. That's always a positive. But more importantly, we actually saw the thing pull together beautifully with some continuity jumped, the grade improvement jumped, and I suppose we saw the opportunity for a much bigger picture developing with that infill drilling. So first of all, we've had, I guess, leverage and pivot points on the size of the deposit. The next one is we're lifting the quality. We're finding opportunities even within the deposit. And then after that, we did the obvious, which was drill to the south and drill to the north. And that little arrow spins around. I think that was a gap on one of the previous diagrams you saw, and it infilled beautifully. And importantly, if we look at the average grade of the deposit, as I've said before, it's a big tonnage, low grade system, but low strip. We saw some nice improvement in the grade on that southern corridor, and perhaps more focus and more of a structural control on the geology. There's about another kilometre of strike length added. Some really nice intersections, big, thick, low-grade ones, some nice, sweet, high-grade ones at pretty reasonable mining widths as well, all of which is boding well for resource growth, particularly when you look at those previous two tactics. And the last lot of results that will make it into the resource, there's a section there to the north where we stepped out about 200, 250 metres and started to see that section grow again. And again, all shallow ounces. Now, beyond that big bulk tonnage operation, and again, there is that higher grade architecture in there, we see an opportunity to step back under what is a much bigger system. On there, you see we're going to drill in the footwall and look where most people don't look until it's too late or up and running. A number of deposits I've seen where people have found things hidden beneath of the deposits is amazing. We're going to step out, probably going to drill about a 1.2 kilometre deep hole, starting the end of this month and finishing at the end of March. And then we're also going to look for these sort of stack load opportunities where we see these ladder veins that appear. Now, all of that, I think, could show a much bigger system again. At about the same time, we're pulling our resource together. The other reason the deposit works is an incredibly simple, clean, first-class metallurgy, which really gives us an advantage, I think, perhaps over some of our peers. And I'll go through some of the numbers there and sort of spell it out, but there's three main points. One is an absolutely excellent recovery overall. This test work's done across every rock type in the deposit, 5 different geographies, 5 different rock types, 3 different material types, removed any source or any question of the variability of the deposit. The other great thing was that when we look at the gold recovery, particularly at coarser grind sizes, so where we can look for lower energy use, much less grinding, we're seeing 92% recovery at those areas with much lower energy use, lower cost. Beyond that, I guess, is the other point there is that I think on average, 65% of the gold is gravity recoverable. So again, another thing pushing down that cost of processing on this deposit and perhaps giving it a unique advantage. And the last thing there, which is something that we really look for, is that there's one figure there where we looked at even the 0.25 gram material, so really low grade material, was still recovering at around, I think, 97% at finer grades. Now that's quite unusual and quite unheard of. What it means is there's a much bigger opportunity than we've even looked at before. Our previous resource was cut about 0.4 grams per tonne. We have a very long grade tonnage curve with a lot of material below that. And to be able to process that material, which is going to come out of an open pit anyway, could really give us an advantage and really start driving that stripping ratio down again. And everything's adding up towards a much bigger resource upgrade with all those different tactics coming together. So I encourage anyone to watch the result of that towards the end of March. What that really does is it gives us some options as well in terms of how we process the deposit. We're starting to look at lower cost options such as heap leach, which are lower operating costs, which again can help your pit shell grow. And obviously lower capital costs again, so lower upfront costs. I'd like to draw an analogy to perhaps, if you want the vision for this deposit or our vision for this deposit, is there's a mountain, a mine in Nevada called Round Mountain, which belongs to Kinross, and their resource is about 100 million tonnes at 0.6. perhaps one of the lowest cost, most profitable mines, gold mines in the world, with a reserve of 100 million tonnes at 0.6. And we're starting to see a deposit, early days, but of that kind of size and relevance on a global scale. Beyond that, beautiful land package. And the two blue lines on there really sort of highlight that key Kilkenny shear that I showed earlier on. And for the first time this year, we've managed to get out along that 60 kilometres of strike length with Auger Rigs. I think we've probably done about 10,000 metres already this year. This is the results of about 20,000 metres at the end of last year. And we've seen a number of prospects come together on some really beautiful geology shears, some very respectable intersections along that structure. 9 metres at 8.67, 5 metres at 6.82, 30 metres at 1.32, importantly along its whole strike length. And what we're doing first is broad, wide-spaced air core drilling, where we look for the opportunities before we narrow in on any one particular target and develop. And you'll probably see in the next 6 months, 20 to 25,000 metres drilled to that respect, and obviously some follow-up drilling to match as well. Last but not least, in New South Wales, we picked up an opportunity in a joint venture with a couple of learned gentlemen who'd had a look at this opportunity from the old data. West Wyalong Goldfield produced between 1894 and 1915, about 500,000 ounces, but most importantly at 1 ounce per tonne. Its best year of production was 1911 at 3 ounces per tonne. It's a very high grade historic gold mine, completely underdone by modern standards. And I think it was here in Western Australia, I think we would have seen it go through 3 or 4 cycles. We've done our, if you want, social license to operate part. We've gone through our land access part. We've had an initial poke with a couple of diamond drill holes, which I'd sad to say weren't close but no cigar to start with. But I think we'll definitely be back, and some of the geology we've learned by drilling those holes, which were the first holes done on that structure in 100 years, is certainly going to bode well for perhaps the second half of this year. And I'll put its location there next to, I guess we've got to throw Fosterville in to remind everyone about the super high grades. And we've got Evolution's Cowell deposit 40 kilometres to the north of us, but a beautiful terrain to be in. Key points on there: aggressive drilling campaign, 40,000 metres planned in about the next 6 months. Air core, regional air core, RC drilling, new deposits, building up the resources. And at the bottom side of that slide, we're talking about some of the economics I've already touched on, the metallurgy, the fact that we have we're looking very closely at heap leach studies and economics. Just as we've looked at the milling metallurgy, and some of those numbers I showed you, are now doing exactly the same program on the same rocks, but looking at those heap leach and vat leach options. Again, looking to push that cut-off grade down, push our operating costs down, look for economies of scale, and perhaps provide a very different picture at Apollo Hill in the near future. And on the back of that success, there's some resource drilling planned for that next push, where you saw the deposit open to the north. There's the belt, there's the picture of the deposit. And again, I think we've now joined it up. That's as long as the super pit and as wide as the super pit, just to give you some picture of the scale of the thing. I'm going to bring that drill program, metallurgy study, together with a resource upgrade. And I think there's still plenty of room to grow north and south of that deposit as well. Standard disclaimer, and one shameless plug for the Gold Industry Group, of which I'm a member and a director. And I guess we're on a, for all the gold explorers in the room, Gold Industry Group was originally formed, I think, to help champion the industry when we saw a royalty push. Very important for everyone to remember that we don't just do things reactively, and we are proactive. So the Gold Industry Group helps unite the gold industry. We champion our industry in the community. ESG matters, build our reputation as good people, good citizens, educate children, workforce, and I suppose also draw together collective knowledge and support each other now and into the future. And in terms of bang for your buck for, I guess, the more junior members in the audience, the producers that are in there pay on an ounce production basis. So I think some of those guys are probably paying about 20 times what I pay in my membership fee, but I get the benefit of working with them. So I'm going to give that one shameless plug in my final minute. Thank you very much for listening.
Just before I introduce our next speaker, a reminder that there is a scratch and win happening at the Stantec stand. They're giving away 3 sets of Apple AirPods. So visit them on stand 24 for your chance to win. Okay, so no, they will give you a ticket which is actually a scratchy. So you have 2 chances of winning. You can win the AirPods or you can win whatever the scratchy shows. Okay, one more presentation before we go to lunch. With nickel prices at multi-year highs and a new wave of demand being driven by the burgeoning EV industry, Mincor Resources is about to rejoin the exclusive ranks of Australian nickel producers. As it does so, the company is working to unlock not 1, but 2 significant new discoveries in its portfolio. To tell us more, we're joined by Managing Director David Southam. Welcome, David.
Thank you. Thank you very much for the opportunity to present. First of all, I'll put out apologies for the Chief Field Assistant at Legend for not warming you up. Hopefully now, when you hear the Mincor story, you'll get very warm. I'm actually going to talk a little bit about production today, even though it is an explorers conference. However, if you would like to get into some deep geological discussion on boutonnage and velocity, thrusts and channels, we do have a new General Manager of Exploration, Dr. Zoran Seat, who joined us from a company, was the Bad Cassini company. We're the Good Cassini within Mincor, and he'd be pleased to have a chat with you at our booth. I also like to start the conference reflecting on what did we talk about last year, what did we promise? With these conferences, you do hear a lot of promises, and I think it's important that you go back and have a look. And I suppose on a somber but also a very respectful note, last year Dr. Roy Whittle had only just recently passed away, and we did promise that we'd be looking to do something in his honour. And so I think certainly in my career, was one of the proudest moments when we opened up the Cassini mine, and with the absolute support of Barbara and her children, were able to name that the Whittle Decline. So that was fantastic for Mincor, but also for the Whittle family. Also, we talked about we'd be financing this project, and we've actually moved from a project finance facility into a corporate revolver with the help of BNP. So thank you to BNP. I see someone there in the audience, so that might mean another 10 basis points off the interest rate if we're lucky. But it's a very flexible facility. There's very few companies that are building a project that can have a corporate revolver facility rather than project finance. If you weren't allergic to money, you would have listened to us last year and invested in Mincor. Our market capitalisation has doubled since we presented here last year, and in the last 3 years, we're up around 13 times. And what's happened over that period is that the nickel price has certainly increased significantly. If you have a look at today's nickel price, it's about 32,500 Aussie per tonne. We completed our study that we released in the middle of COVID at $22,500 per tonne. So if you don't think that we're actually going to find 1 extra tonne of nickel, and by the time you've seen this presentation, you'll be pretty convinced we're going to be finding a hell of a lot more. You don't need a lot of math to calculate 63,000 tonnes of nickel in concentrate times $10,000 a tonne, what that means with not a lot of cost attached to it. Also in that time since we presented, nickel in terms of EV growth, EVs have just exceeded all growth forecasts. It's been confirmed in recent press around nickel certainly being the future, looking to reduce the amount of cobalt also in the battery. The LME stockpiles where nickel is stored is at decade lows. I haven't seen it in my time. There's a couple of weeks worth of production left on the LME stockpiles and virtually nothing on the Shanghai Futures Exchange. We've also, we've actually produced some high grade ore. And when I say high grade, I actually mean high grade. And so that's over, around 3% nickel. And I'll talk about that shortly. We also talked about exploration, that we'd be well funded for exploration, which we have been, and we've made a discovery at Hartley, which I'll cover. We're drilling out the Golden Mile of nickel in our northern operations. We talked about doing that, and we've also hit massive sulfides in that. And so look forward to talking about that. And whilst we've been doing this, and this is really a shout out to the Mincor team, from the time we released our feasibility study in March 2020, which was just when COVID was really starting to hit, we've had to build, fund it, let contracts and employ a hell of a lot of people. And we've only known this during COVID. So it's been a significant effort by the team to keep us, one, very close to budget from numbers that were generated a number of years ago, but also to be able to recruit people. And, I was pleased that we released our first sustainability report. And in that sustainability report, we were able to report we had a 100% retention rate of our people. And one of the key factors here is that every single Mincor employee is a shareholder. So with that introduction, we are well funded, that you can see there with the cash at bank. We have a very diverse register in terms of ownership. Wyloo Metals, which is ultimately reports up to Andrew Forrest, has around 14%. Independence Group has just under 7%. Tribeca, which is a large global resource fund, has over 5%. And then we have a significant number of family offices and institutions below 5%. And you can also see there the 30 million corporate revolver. As I touched upon earlier, it's quite unique. Before you've actually produced a ton of nickel concentrate, that you put out a sustainability report. And I was looking at the Centaurus presentation, and they are well down the curve in terms of carbon emissions. To point out, when we're in production, we'll even be half of that carbon emission. So we will be, if not the lowest, very close to the lowest carbon emitter for a nickel production company in the world. And so that's something that we're pretty proud of. We only disturb 0.017% of our ground holding. So I touched upon earlier first ore, and we did hit first ore at our northern operations, and I want to touch upon that. We are prepared for COVID coming in as best as we possibly can. I noticed Mineral Resources got a lot of coverage around their electronic system. We've already implemented that system. So we have contact tracing, we're testing people, and we are ready to go for those borders to open up. Reminding you that Camboda is a truly world-class address, 1.6 million tonnes of nickel. At our northern operations, that Golden Mile, there's 6 kilometres there, which has produced 1 million tonnes of nickel, and we are drilling right in between where no drill holes have been before. So we're pretty excited. There's magnificent infrastructure around, and one of the decisions that we've made since last year is we're building our own accommodation facility for Cassini, which is that brand new discovery we made. Cassini, we believe, will be well beyond a 10-year mine life, and that's why we're putting in infrastructure for 20 years plus. So you can see where our two operations are. Northern operations, right next to the Camboda nickel concentrator. So if you're a golfer, it's a driver pitching wedge. If you're one of our non-executive directors, Peter Buick, it's a shank, a 3-putt, and a couple of drivers off the deck. But it's the message is here that it's very close, so very low in terms of transportation costs. And then Cassini, 70 kilometres away, main highway right beside us, water pipeline, power. So we're truly in the heart of fantastic infrastructure here. So we do have an offtake agreement with BHP Nickel West, which we triggered since last year. We can throughput around 600,000 tonnes of ore into that concentrator, potentially a bit more. We do get paid on concentrate. So Mincor of the past previously got paid for ore sales. We get paid for producing concentrate. And that's why our CapEx is particularly low, $68 million to build our project in pre-production CapEx. But always be mindful when miners talk about pre-production CapEx, because some of them cheat. They don't actually tell you how much a project really truly costs. You need a little thing called working capital on top of that. And so we've always been very upfront that our CapEx is around that $70 million mark, but to get it all up and running, just over $100 million. So it's an interesting space at the moment, nickel. Some have referred to it as the Game of Thrones. If you watch that, you can make your own conclusions about what characters various people are. But certainly what's important here is Mincor is particularly strategic. Someone has also described us almost as the United Nations peacekeeping party here for nickel, which is interesting. But the reason is, you have a think about where we're placed. We've got BHP, who are our offtake partner, who are right next door to us. Their tenements surround our tenements. Our number one shareholder, Wyloo Metals, decided to get into a stoush with BHP for an asset in Canada. And then at the same time, IGO, our second largest shareholder, launched a takeover bid for Western Areas. And there's been press scuttlebutt that Wyloo, our first largest shareholder, might decide to block that. Who knows? We don't know. But you can see here, we're certainly the peacekeeper. But what is for certain is that BHP need our product. The Camboda nickel concentrator, they've had 30 people there working on getting it ready to go. And we will be producing first nickel concentrate in the June quarter. Why am I excited about that? It's to actually have some revenue. It would be really nice to have some money coming in the door, because at the moment, it's only money going out the door. So in terms of first ore, what we've been doing is building the incline, which is the yellow line that you can see connecting Long to Durkin. And the image below, just to confuse you, is a reverse of that. We've completed most of the decline infrastructure. We're doing a vent raise, which is that red bar that you can see at the moment, which we're just over halfway through. The first ore, we actually hit early, and we hit 36 metres early. And we believe that that may be a completely new ore surface that connects all the way back to the historic Otto Juan mine, which is about 800 metres away. We've got a piece of that ore on our booth from that first cut, which is grading around 15% nickel. So if you like high grade and you're a geologist and you want to get excited, come and touch our rock at our booth. And there you can see a first picture. So the massive sulfides, you can see that standing out from that new ore surface. There was then matrix, which is grading about 4 to 5%, and then disseminated around 1 to 2% nickel. So you can see how high grade it is when we're talking disseminated of 1 to 2% nickel, and then high grade, which is almost that gold color, which is around 15% nickel. And pleasingly, on Tuesday, we were able to announce our first ore delivery to the Camboda nickel concentrator. You can see us using there the MLG truck. At Cassini, I talked about earlier that we're establishing a long infrastructure for a long mine life. This is modern mining at its best. And you can see on the right-hand side, or sorry, the left or right, depending which side you are, The black image, that the twin decline, which is one's for vent, one's for transportation, are now right at the top of the ore body. So we will be getting first ore in this quarter from Cassini. Reminding you that this is a very high-grade ore body. It is the first discovery in Camboda in 20 years because no one put money into greenfields. And I've seen some really cool intersections listed above, listed in previous slides from other presenters. You look down towards the bottom of what we've drilled out from surface. Okay, we'll be drilling this from underground for years to come. But if you look at from just what's drilled from surface there towards the bottom, 17 metres at 5% nickel is pretty exciting stuff. And you can see that it thickens up. And we're only on the start of this. Cassini North, we've been getting intersections, which is that channel that you can see adjacent. We'll be drilling that from underground very shortly. The Golden Mile, I'm going to run out of time here, but what you can see here is that we've only completed around 40% of the exploration drilling at the moment, 2 diamond drill rigs. We've hit massive sulfides on the long side of the border as we're heading towards Durkin North. We're starting to see a trend develop, and there is a program now to drill that out. But certainly, again, massive sulfide intersections, high grade, and within 100 metres at worst of infrastructure underground. Also, in the same time, we've had the discovery of Hartley. Very quickly, put down a hole looking for a channel, what we suspected, hit massive sulfides. You can't get any better than that. We've now confirmed over 1 kilometre of strike, and we still keep intersecting nickel sulfides. This is Cassini in its very early days, different style of ore body, still a komatiite, but a different type of structure. I would be watching that space. Our general manager who retired, we named that after him, Rob Hartley. I think I've talked enough about the nickel market. You can see there our carbon emissions are extremely low. What's important here is that we're funded. We have buffer on top of buffer for funding. We'll get revenue very shortly at a nickel price $10,000 a tonne higher than what we studied at. It has never been a better time to be a nickel producer, and I am exceptionally proud of the team and the board for making a decision 2 years ago to go early. I would hate to be starting to build a mine in today's environment. Thank you very much.
And that takes us to lunch, and we will be back circa 1:45.